And we're recording there. I will continue to monitor this and let more people in as we go. Everybody can see our screen, correct?
Yes.
Perfect. All right. So let's get started. Thank you very much, everyone, for joining us. And we're happy that you're here. Interesting topic today. So we hope that you get some great information. If for anything that you get out of this is knowledge, information that you'll be able to pass on to potentially your clients. And if we have any folks that are not professional service providers that are with us today, that you get some great information as well. Okay, so a little bit about us right off the top. My name is Paul Cuttajar, for those of you that don't know me. And along with my business partner, Esther Goldstein, we run the Lifestyle 55 Plus network. The main directive of Lifestyle 55 Plus is to provide an unbiased seniors housing directory. We also deliver a training program for professional services, working with older adults through our Lifestyle 55 Plus affiliate and master's programs. We also offer a consulting service, empowering families to make informed decisions as they consider a late in life transition, as well as industry-related marketing programs. Now, this is all delivered by the seniorcareaccess.com platform. Many of you are familiar with that already, and if you're not, by all means, head on over maybe after the presentation and check us out there. Today, we are presenting on reverse mortgages. It's often a bit of a heated topic, but we find that there is a lot of misconception and perhaps even old ideas that may prevent the benefits of a reverse mortgage to coming to fruition. So we asked our partners at Bloom Financial to help us in putting this webinar together, and that's why we're all here now. Just a few more people coming in. So we do invite your questions, but what we're going to do is if we can ask you to put them into the chat at the bottom, and I'll be able to monitor that chat. And then Nancy, I'll bring those questions forward and we can answer those. And also at the very end, if you all want to hang around and we'll spend some more time in answering your specific questions and comments at that point as well. So allow me to introduce our guest. We have Nancy Karlovich, is currently the Director of Partnerships at Bloom Finance Company. Bloom is a Canadian company that uses technology and customer-centric innovation to deliver simple and seamless reverse mortgage solutions to Canadians 55 and older. Nancy comes from a long history of working within the mortgage marketplace, within the banking and credit union space. Her focus in the reverse mortgage marketplace has been a passion for the past 10 years, coupled with providing the right advice for referral partners looking for solutions for their clients. And just a few more people here. Nancy is a graduate of the University of Toronto and has a business degree from Shoreditch York University. Smart lady. Nancy, thank you for taking the time to helping us understand reverse mortgages today.
Thank you for having me, Paul. Really excited to be part of this presentation and have your ears today and learning about reverse mortgage, a topic that I'm super passionate about. And I hope that through the presentation, you'll understand more why this is an effective tool for Canadians 55 plus. Are we ready to begin?
Yes, I'm just going to keep monitoring and let people in.
Okay.
So let's go ahead.
Yeah. So I hope through this presentation that you will get an understanding of reverse mortgages and how reverse mortgage works and as opposed to other options also. And I hope to shed light on some frequently asked questions.
Awesome.
So next slide.
Nancy, just I think you've muted your video.
Oh, okay. Oh, sorry. I hit
There
it by
you go.
accident. There I am. So what brings us here? So what are some changes in plan or retirement planning that brings us to this point? Next slide. Well, we see the perfect storm brewing in Canada over the last few decades. We see an aging population who really want to stay in their home. They don't want to go to seniors care a lot of times or assisted living facilities. We also see economic issues with rising interest rates. More and more seniors are carrying debt into retirement. But on the plus side, we've seen over past 15 or 20 years unprecedented home appreciation growth. Lastly, we see traditional retirement income pillars such as CPP and OAS not affording individuals a lifestyle they want in retirement. And really, private pensions are few and far between for a lot of seniors right now. Coupled with this, we see a lack of personal savings that seniors have to fuel their retirement, because we are living to ages 80 and 90. So what is one solution? Next slide. One solution is home equity release. So what is a reverse mortgage? We can go to the next slide. So a reverse mortgage, really simply put, is a loan secured against the value of your home. So homeowners can unlock the home's value without having to sell it. So back a little bit more, next slide. What is a reverse mortgage? We see some use case scenarios here. So really, a reverse mortgage is a financial tool for seniors in retirement that allows you to access up to 55% of your home's value in cash that is tax-free. What we're seeing in people coming to us, so why they want to have a reverse mortgage, they really want to boost a retirement income and overall standard of living. Majority of the people come to us are carrying a mortgage into retirement, and they're seeing their overall income decline. They're having trouble keeping up with a mortgage payment. By releasing home equity and paying that off, they have interest and principal free option. It really puts more money at the end of the day in their pockets. They're paying for travel and leisure experiences with it. They're providing a living inheritance to their loved ones. What's happening is that people realize that they might be in their late 60s, 70s. They're going to live another 10, 15 years. And they're saying, hey, my kids and my grandchildren need this help now. Maybe they need it to pay for a down payment on a home or pay down personal debt or anything like that. They're releasing home equity and giving their kids their retirement, giving with a warm hand, we call it. In some cases, they're purchasing a new home. They have a down payment, but they don't want to carry a traditional forward mortgage. So they're using a reverse mortgage to purchase that reverse home, that home, that new home. They're making home renovations besides the new roof or the new windows on their home, which can be quite costly. They're making their home much more livable in their senior years. They're putting in that walk-in bathtub, maybe a chair lift. In one case, we had someone put in an elevator in their home. And a lot of people are paying off debt. They're using a reverse mortgage to pay down high interest debt. And they're financing health and living care expenses. They want to age gracefully and in their own home, a home that they love and that they want to be in. So they're using the money to hire nurses or PSWs to come and help them with the daily chores, their medication, and things like that. One of the primary benefits with a reverse mortgage is that there are no regular principal or interest payments. Interest is added to the balance of the loan, and you really only have to pay it back when you cease occupying the home. And it doesn't impact any sort of retirement benefits that you're receiving from Canada Pension Plan or OAS. So next slide. So back to how does a reverse mortgage work? Well, really, a reverse mortgage allows you to access tax-free cash from the value of the home without having to sell it. You can access up to 55%, which I'll get into in my other slides, exactly how we calculate that, the value of the home, while continue to own 100% of the home and retain control. Unlike a traditional mortgage, a reverse mortgage requires no regular principal or interest payments. Instead, a low friendly interest rate is charged, and the interest is simply added to the balance of the mortgage. The mortgage becomes due only when you and your spouse no longer occupy the home. So either the last surviving spouse passes away or you choose to sell it. One of the things about a reverse mortgage too that people take part in is that at any time, the client is more than happy to pay the interest only portion on a reverse mortgage if you want to negate some of the home erosion on it. So let's talk more about home ownership and repayment on the next slide. When you take out a reverse mortgage, you retain ownership of the home. Of course, no regular interest payment are required. And the only obligations a person needs to continue to make is paying property tax and home insurance and keeping your home in good repair. You never have to move out until you're ready. Moreover, with any reverse mortgage, you have a home equity guarantee that comes with a reverse mortgage. Whatever happens to house prices, the amount ultimately you have to pay would never exceed the fair market value of your home. Even better, if the home appreciates, the rise in appreciation is yours to keep. So when we talk about home equity guarantee, I like to use this example. Let's say your home is worth $1 million and you access 400,000 of that. You stay in your home for the next 15 years. And let's, for example, there was a major downturn in the housing economics. And now your home is worth 800,000, but your reverse mortgage grew to 855. You or your estate will never have to pay the difference. The shortfall is on the lender. The shortfall of 55,000 is back to the lender. And please note that in the history of reverse mortgages, the 10, 15 years that I've been in the business, I have never seen this happen where a reverse mortgage grew larger than the actual home is valued. With home appreciation costs are conservative lending practices, there's always equity left at the end of the reverse mortgage. We can go to the next slide.
Nancy, that's a really interesting point because
Sure.
some of the comments or conversations that we have about reverse mortgages, people are worried that the reverse mortgage company is going to end up owning the property.
Yeah.
With the amount of interest that's accumulated, et cetera. So
Yeah,
I think
no.
that's a really interesting point in that it does max out.
Yes.
Yeah.
So let's talk about some eligibility requirements for a reverse mortgage in Canada. To be considered for a reverse mortgage, the minimum age is 55. Really, we don't see a lot of 55-year-olds come to us. I think our sweet spot is around 65 to 70. They've been retired for a few years. They realize that their OAS and their CPP and maybe their personal savings is not keeping them in a lifestyle that they feel that they deserve in retirement. So 55 is the minimum age. But what we look at you and your spouse's age. We look at the type of dwelling that you're in, like type of property. Is it a condo? Is it a detached home or townhouse? We look at the appraised value. We look at the property location. So a home in Toronto is deemed a little bit more valuable than a home maybe in Welland. We look at the condition of the home. But and then we come to a loan to value based on that. Unlike a traditional mortgage, your income or credit score is not a major pillar to the eligibility for a reverse mortgage. As long as you can afford to pay for things like property tax, home insurance, and maintenance, you will be fine in securing a reverse mortgage. So it's a lot easier to get a reverse mortgage than a traditional forward mortgage. So as you can see, it's pretty simple. As long as you meet the eligibility requirements, reverse mortgage really is a simple process. Next slide.
Nancy, again, so are you saying that your credit score, you're not actually considering that as part of this?
No. We look at credit. We do look at credit. We'll look at bruised credit and things like that, but it's not a major portion in the reverse mortgage. It's really equity-based lending.
Yeah.
Some considerations really that you or your client need to think about now that you know the benefits. A reverse mortgage is generally subject to a slightly higher interest rate than traditional forward mortgages because there is no payment required. For example, right here now, our 5-year rate, I think is at a very good rate at 6.88. So compared to forward mortgages right now, I think it's very competitive considering you don't have to make a payment. This is a mortgage balance that grows over time with interest because we're adding the principal and interest to the mortgage. So it is a mortgage that will be higher when it's time to either pay out or time to sell out the home. When you cease to occupy your home, whether you sell or pass away, the loan needs to be repaid. just like any other mortgage. Let's talk about some of the myths associated with taking out a reverse mortgage. That's next slide. One of the myths we see is that you no longer own your home. And this is by far 100% false. Some people are afraid they'll lose ownership of their home if they take out a reverse mortgage, but obviously the opposite is true. A reverse mortgage allows you to take up 55% of the value of your home while maintaining 100% ownership. And we act just like a forward mortgage. We register a charge against the home. And again, you only need to pay it back when you cease to occupy the home. And at no point, and people think maybe when you pass away or you sell, somehow the reverse mortgage company comes in and works with the realtor or defines, what you should sell your house at and when you should sell it. We are arm's length at any stage. We're just a registered charge against the home, just like any other mortgage company. You retain full control. On the next slide. And the myth is you may owe more than what your home is worth. Well, because of the home equity guarantee that I talked about, you'll never own more than the home is valued at. And what we see a dip in real estate right now. We see some prices dipping, but what we see over the past 20 plus years is a consistent appreciation when it comes to home prices. So your home is appreciating and it's keeping ahead of what you are being charged in terms of interest. Sorry, next slide. A big myth is that your children will lose the family home. While the remortgage does become payable when you move or pass away, your estate absolutely remains in control of the ownership of the home. This means your children will always when let's say they pass away, they can always refinance the home and pay it back. The bottom line, really, your family is in control of the home. Another big myth is there'll be no equity in the home to give your heirs. When a reverse mortgage is paid off, borrowers or their children will retain the equity in the home. So let's say if a reverse mortgage is, your home is worth $1 million, the reverse mortgage due is $600,000, the other $400,000 will obviously pass to the heirs. It's part of their inheritance. So anything left over is really for your heirs, so you don't have to worry about that. So next slide. So the realities of a reverse mortgage is that we come with a home equity guarantee that will really, this is a promise that the borrower will never own more than their property fair market value in case the real estate prices drop or the loan exceeds the value of the home. Many reverse mortgage clients really like this product because they set it and forget it. You're not making a payment. As long as you keep up on property obligations like paying your property tax and home insurance, you'll never have to make a payment during the term of the loan, and you can stay in your home as long as you like. Other products like HELOCs with loan to value caps, meaning if the loan exceeds a certain limit, you'll be forced to sell your home or repay the balance. That will never happen with a reverse mortgage. Your equity will continue to grow. It's absolutely tax friendly. And the balance on a reverse mortgage, some people worry that the balance on a reverse mortgage will eat into their home's equity over time. However, as long as real estate prices continue to increase, home equity can also grow alongside your mortgage balance, which I'll talk to on another slide. And reverse mortgage proceeds, I should say, are treated favorably from a tax perspective. Unlike selling an investment from your retirement portfolio to fund expenses, which usually comes with capital gains taxes, reverse mortgage payments cannot be taxed, and they considered the same as loan advances from traditional mortgages. So let's talk about a HELOC versus a reverse mortgage. That has become very popular, especially over the past, 8 or 10 years as mortgage rates have dropped. On one hand, many customers consider taking out a home line of credit or a HELOC. This method also allows you to have access to the equity in your home and receive it as cash as you need. However, there's a few significant drawbacks for seniors. Since HELOCs requires a borrower to pay interest, the government government says that with the current income stress tests that are required before a customer can access this product, meaning many retired borrowers relying on CPP and OAS may not qualify. This is not the case for a reverse mortgage. If a HELOC balance rises past a certain level, the bank can force the borrower to repay the balance, which usually means selling their home. For a reverse mortgage, on the other hand, there is no loan to value cap, meaning you can stay in your home as long as you like, no matter what happens to the loan balance or the home value. If a HELOC balance exceeds the value of the home, the borrower is on the hook for the difference, which can present serious financial challenges for seniors. On the other hand, reverse mortgages come with the home equity guarantee, which gives you really a great peace of mind. So let's talk about another thing that sometimes seniors may look at is really renting, selling their home, which is their biggest asset, and renting a property. This can provide a really good cash windfall in terms of sale of the home. Also, it comes with some downsides. Firstly, it means leaving the home you love. If you want to spend your retirement years where you are, this isn't an option that'll work for you. Second, selling your home means giving up control. You'll be a tenant versus a homeowner. Some people don't mind the change, but others prefer to have the freedom to make changes to their property, like accessibility renovations. Lastly, if you don't own your property, you can't continue to benefit from home price growth in the future. Many reverse mortgage customers like the fact that the wealth they have in their homes can continue to grow. Let's talk about reverse mortgage versus selling investments, which is also an option for many seniors that may have a stock portfolio, RSPs, things like that. Many seniors are turning to selling investments like stocks and mutual funds before thinking about a reverse mortgage. Certainly, this is a fast way to access cash, but is it the right option? Selling investments usually means you owe the government capital gains tax on the profits you made on those investments. On the other hand, reverse mortgage proceeds are tax-free. You should always think about the return you would expect from the investment as you're selling versus the reverse mortgage rate, reverse mortgage interest rate. Selling an investment portfolio that could earn you 5% or more per year isn't free. Many seniors have a disproportionate amount of wealth in their home versus the investment assets. Selling investment increases that concentration, really making your net worth dependent more on the real estate market. So how is reverse mortgage equity maintained in the home? And I'm sorry, I think the slide did not turn out very well and it's hard to read. But this basically, I can talk you through this slide. For this example, I used a 65-year-old female and a 68-year-old male that released $315,000 on $1 million home. I used 4% house growth. So in 10 years, the house now is worth about 1.4 million. Accrued interest on the loan is about, with the principal and the interest, is about $859,000. So home equity, you still have about $884,500 in home equity based on this example. I'll be able to send out a calculator to the realtors that are interested in looking at this financial illustration. But what it basically shows, with modest home appreciation costs coupled with our low interest rates, that you're always ahead with a reverse mortgage and you always have the ability to have additional home appreciation, and you'll always have some sort of leftover if it's time to sell or pass it to your heirs. So let's talk about realtor applications for this. I know there's a lot of realtors on the line. So a lot of people think about downsizing, and a lot of cases, staying in their home makes a lot more sense for seniors. It's a home that they're, raised their children in. It's a community that they're comfortable in. It's traumatic leaving your home. A reverse mortgage can really pay for upgrades and avoid a lot of the costs associated with moving. In terms of upgrading, right sizing, use of proceeds of a sale of their home and combining it with a reverse mortgage gives them a no payment option. Many people like to buy a vacation property. They keep the principal residence, release home equity, and they buy a cottage or vacation home to enjoy their retirement years and bring their family together there. We talked about helping a family member, giving with a warm hand, using a reverse mortgage to unlike equity to gift a family is a great option. What we see also on the rise is gray divorce. So people in their 50s plus are divorcing at a very high rate in Canada, according to statistics. So using a reverse mortgage to unlock the equity of the home and to pay off one spouse is a great option in terms of a reverse mortgage. So let's talk about reverse mortgage frequently asked questions.
Nancy, just on the application part. So there is no restriction on what you do with the money?
Absolutely none.
So
It's
that's
their
not part of
money.
the application. Nobody's going to say, so what do you plan on doing this? You're going to buy a couple of Ferraris. Like that's not
Yeah,
a good
we
thing to do with your
ask.
money.
Yeah, there is on the application we ask, and it's really a FSRA requirement. It's like know your client requirement, but at the end of the day, it's up to them to do whatever they want. It's their money. They've earned it. It's their home.
Very good.
Yeah. Yeah, so just some frequently asked questions in terms of reverse mortgage. One is, how is a reverse mortgage designed? Basically, a reverse mortgage is like a traditional mortgage. Instead of having to pay the balance, interest is simply added to the amount you borrow. The balance, including interest, is paid back when the last surviving spouse leaves the home. Can you get out of a reverse mortgage? That's a great question. You can pay off your reverse mortgage whenever you want by selling the property or refinancing with another lender. You can also pay, say you win the lottery, you can pay it back in cash in certain cases, but in certain cases, prepayment penalties will apply, just like with any other mortgage. How much tax-free money can I get from a reverse mortgage? Again, like we talked about, the amount you receive is calculated based on location, type of property, condition of the home, the appraised value, the age of the borrowers, and you can receive up to 55% of the home value tax-free. The last slide, wanted to talk about a Bloom success story and how Bloom helped this client gain financial peace of mind in their retirement. So we had a widowed, age 84. She was just receiving government pension income. She was, unfortunately, she was helping out her children, and she had remortgaged the house to help out a son who was getting divorced. So she had mortgage debts of $256,000. She did also have some credit card debt because she was, with her pension, the mortgage payments, everyday expenses, groceries, car payment. She didn't have car payments, insurance, little things like that started to add up, and she started to rely on credit cards. So really she was at a point, she was unable to manage her monthly expenses, but her home value was 1.2 million, and she did not want to leave that home. She wanted to age there. She was a very healthy 84-year-old. So her goals was to age in place, and she wanted to make some accessibility renovations to the home, and she wanted to fund daily expenses and really pay off all her debts. So what was the solution? We released $624,000 in terms of a reverse mortgage. She never had to make a payment. She paid off her mortgage. She paid off her debt. She used some of the proceeds to upgrade the family home and make it more senior friendly. And she has now a positive monthly cash flow was established. Really, the outcome was that the client enjoyed peace of mind knowing she can live comfortably in the home that she loves, and she was managing her expenses. And I think she took a trip too. And the broker, in this case, the broker that referred the client was well compensated for the referral also. Next slide. That concludes. My contact details are there. If you ever wanted to reach out and learn more about Bloom or become a referral partner, I'm more than happy to talk to you more about that. So I'll open up the chat and or just open up the floor and see if you have any questions that maybe I didn't answer about reverse mortgages.
Yeah, if anybody has any questions, you can just go ahead and unmute yourself and ask away. You have to have questions. I know you guys have questions.
I have a question, Paul.
Right on, Teresa.
Hi, Nancy. Nice to meet
Hi, nice to meet you.
you. Going back a few slides, say the person who took out the reverse mortgage passes, and now the family has to deal with that. So you said they can get a new mortgage to pay that off. Could you just walk me through that again, please?
Yeah, so let's say, for example, let's say my mother's house. She passes away. She took out a reverse mortgage for $500,000. The house is worth $1 million, and now passes to myself and my brother. We're not reverse mortgage age clients, so if we wanted to keep the family home, we would have to just get a traditional forward mortgage and pay the reverse mortgage back. Or if we had $500,000 in cash sitting in the bank, we have to, at the end of the day, the reverse mortgage needs to be paid back. So you either secure financing for that, you pay it off, or you sell the home and you keep the proceeds.
And that's assuming that the house gets willed to the children, right?
That's assuming, yes.
Yeah, I'm just figuring out who has ownership at that point.
Whatever the will says.
So they can sell it if they choose, and then just use that to pay off the reverse mortgage, or if they want to keep it, they just get their own mortgage.
Exactly.
And pay off the
pay off the reverse. And at all times, the reverse mortgage lender is arm's length. We don't get involved with it.
Okay.
So basically, the reverse mortgage is in first position against title.
Exactly.
Yeah.
So whatever needs to happen to close out that property, whether it's an estate because the individual has passed on, now the estate has to dispose of property. How do they do that? They have to clear it. They can buy it themselves, right? They can go in their bank account, get the money and buy it out, or they can get financing to buy it out and then keep the home if they wanted to.
Yep.
Yeah.
Okay.
I've got a couple of questions.
Sure, Catherine.
All right. So to continue on with what was just asked, first of all, is if the property has to get sold upon death, is there a penalty? Like if it's if there's a 5-year mortgage, for example, a forward mortgage, and there's a death and you cancel the mortgage, there's going to be a penalty. Is there a penalty for the reverse mortgage?
Yeah, in that case, it would be a 3-month interest penalty.
3 months interest, okay.
Yeah, but what we do, if the last surviving spouse passes away, we discount that by, we waive the penalty. Sorry, there is no penalty. Sorry. If the last surviving spouse goes into a care facility full-time, we would discount it by 50%, the penalty.
Okay.
And what if it's just a single person in the home?
Yeah, so whoever's that's fine. It would be waived.
Or if they deceased, they waive. All right. How much time do the people that are liquidating the estate have between the time that the last remaining spouse passes and they have to repay the reverse?
Yeah, great question. In our terms and conditions, we state 6 months.
6 months. All
Yeah,
right.
but we work with them.
Okay. And you said that the money that's being pulled out of a reverse mortgage is tax-free. Can you get a reverse mortgage on a recreational property that normally would be hit with capital gains, or even if you were renting out a reverse a
property? Yeah.
Property?
So currently, Bloom only does principal residence. So I can't really talk to that. I know our competitors do rentals, or they'll do blankets over like a principal residence or a rental or a secondary home. So I don't know the answer to that because we only focus on principal residence.
How do you determine principal residence? If somebody has a house and they've got a cottage,
what's on their ID?
What is on their ID, not what they're declaring on their tax returns?
Well, that should be, so I guess it's a combination, of both, but generally we go with whatever's on their ID as their principal residence. That's generally a rule of thumb.
All right, if they had been declaring revenue on a property and then they decide to declare it as their principal residence and they get a reverse mortgage, is the money that is being returned to them via the reverse mortgage at that point taxable?
I don't believe so.
I would suggest you talk to a tax lawyer on that
Yeah.
one. Yeah, for sure. Because there's a little bit of sneakiness going on
Yeah.
in there. And then how do you define primary residence compared to income residence? Maybe the husband has the cottage as his address, but the wife has
You can't do that.
principal. And so it's I would talk to a tax lawyer on that one.
Yeah.
Thank you.
John? Go ahead. and
Mute
unmute yourself.
myself there. If there's no will or survivors, who covers the costs until the disposal of the estate? Does that just kind of fall into limbo, knowing it's kind of in legal hands, or?
I've never had that situation happen to me, to tell you, John, to the truth, in all my years.
Okay.
I guess it would fall into the courts to follow that process to see if there is someone who.
I would think, if I understood the question, Esther, what's it called? The trustee.
Yeah.
If the estate trustee has to be brought in, I'm sure the reverse mortgage company would have to work with the organization. I would also assume, I don't know, but I would assume that interest is going to continue to accrue
Exactly.
until the property is
Until price
disposed.
sold. Yeah.
So you may have the parameters of like 3-month period or a 6-month period, but should things go beyond that, or there's complications or family issues or whatever it is, the interest is, I would think, is still going to continue until it's disposed of.
Just no payments would be made in the interim.
Yeah. No payments.
They're still on.
Interest
They're still
would-
on. Yeah, they still have title to the property. So one way or the other, I would think, if nobody showed up at the very end, I would think that the person on title, the company, would then be able to dispose of the property and regain.
Sorry, just to interject,
their
because I know
money.
Kim is waiting too.
Yeah.
I would think if you get to the point where you want to stay in your house and you have to go the route of a reverse mortgage in order to live there comfortably, then I think it prudently, you should have all your affairs in order, your powers of attorney, your wills, your estates, or don't take that step yet. Like, get your ducks in a row first.
Yeah, you would hope so.
Really. Yeah.
Would hope so.
But things still happen at the executor point, right?
Yeah.
So,
Unfortunately, yeah.
So the other question I had, Nancy, is
Sure.
if someone applies for a reverse mortgage and they apply, let's say, for a smaller amount than what they thought they really needed,
Sure.
do they just go about increasing that through a second application, or is that something that can be adjusted?
Yeah, there's a few scenarios there, John. So many cases, a client will come, or a couple will come to us, and they might get approved for 400,000, but they only need 200,000 to pay off their debt and maybe 50,000 in credit card debt. So that remainder will stay in reserve and not being charged interest. And they can just simply call or email us at any time. That there's no processing fee, payment fee, or anything, and they can say, "Hey, we need another 20,000, or we need another 10,000," and we can advance the funds. Now, if they took the max amount, and let's say, they're getting older, their house is appreciating, maybe 5 years down the line, they want to do a refinance, that would be possible. So we would look at their age, the property value, and we would see if we can advance them more. So it's a refinance just like on anything else.
Thank you.
Kim.
Thank you, Nancy. A couple of questions. With respect to the calculation of 55% of value, and someone goes in with a traditional forward mortgage, but they don't want to pay it off, is that something you look at?
No,
Or do they have to pay off the mortgage?
We
Need
have to be
in
first. Yes, we
Okay,
have to
yeah,
be
you're
first.
Okay,
And we
My
don't allow
Okay.
seconds behind us.
okay. And who determines market value based on appraisal? Do you hire the appraisal?
We have we use RPS. So we have a national appraiser company that that does this for us.
Okay. And who pays for that cost?
So the great thing about us, we cover the cost of the appraiser.
You do. Okay.
Yeah.
All right. And my last question is, you talked about the last surviving spouse. Do you truly look at spouses, or if a spouse isn't on the home ownership, is that still considered your
Yeah.
spouse?
Yes. So even if we have some scenarios that there's a married couple, but one person is on title, we would still have to quote it on two.
Okay.
Yeah. Because it is a marital home.
Mhm.
So even though they're not on title, if that one spouse passes away, that home will go to that other spouse.
Perfect. Thank you.
Oh,
Sure. A few questions. Is there a minimum amount for a reverse mortgage, for example, 25,000 or 50,000?
25,000.
25? Okay. And I assume because it's a mortgage, there are lawyers involved, there's a cost for setup. Is that added to the balance?
Yeah. So Bloom's processing fees are $1,650. So
Okay.
that's our processing fee, and that can be taken out of proceeds. The only other out-of-pocket expense a client will incur is independent legal advice. So
Okay.
they'll have to work with a lawyer to close this, and that can be anywhere from $800 to $1,000.
Good. Okay, good. And I'm assuming that's a requirement, is it?
It is a requirement.
Right. Okay, good. And a few times I think I heard you mention that they can have a reverse mortgage as long as they occupy the home. And you mentioned also either moving or passing away. What about the situation where they're in Florida for 6 months? Does that matter?
No.
Okay, good. And very basic question, where did the term reverse mortgage originate, or what is it actually, in what sense is it reversed?
Because I guess it's the opposite of a forward mortgage, because it's a mortgage that grows. I don't know where, no one's ever asked me that. Yeah, I guess, yeah. So it's just, I guess, a forward mortgage is, yeah. So this is it works in reverse of a traditional mortgage.
Okay, good. Thanks very much, Nancy. Appreciate it.
Thank you.
awesome. Any more questions? It's an interesting topic. So if you got something that's floating around in there, let's talk about it. Anyone else?
Oh,
I'll throw something out.
Sure.
Seeing that the majority of us are realtors here, and most of us have worked together. Back in the day when I was an active realtor, one of the questions was, well, I'm not going to introduce the idea of reverse mortgage because I can't get a deal out of it.
Yeah.
Right. And I think we had a couple of slides there of certain situations where you would still be able to get a deal out of it. The interesting thing that we find that's happening is we're getting multi-generational families coming together. And there's opportunity, if you know how to use it or present it, there is an opportunity to get other deals from that within other family members. Okay. The other thing is, and you mentioned this, the parents helping out the adult children financially. Things are getting tougher and tougher, and those housing prices keep going up and up and up. Our incomes aren't there. Where do they get additional funds from? And depending on how you set that up, whether the parents are on title of a second property or money is just given to the adult children and there's an agreement that's done, this is a great way to transfer funds while they're alive, not have to wait till a will is in process, for the family to actually benefit from funding.
Yep.
Okay. So anytime that you're talking with clients and they mentioned, oh, our kids are trying to buy a place and they don't have the money, or they're not qualifying, or they need more money, or we want to do, and those folks happen to be house rich, cash poor, I'm not saying you have to do this, but it is something that you could have a conversation about.
Yeah, it's one potential solution,
Yeah,
definitely.
absolutely.
Nancy, are there other opportunities that you can see for realtors if we are helping to promote reverse mortgages with clients?
Yeah, that's a big one. Early inheritance would be a big one. Also, if you're if you have a situation where a client can't afford the payments on potentially a home that they're looking at, and they have a generous down payment but can't afford the traditional forward mortgage, putting a reverse on that home and having a payment free option is always good.
There it is. So even the buying a vacation property or buying a secondary property, the senior couple could get a reverse mortgage, use those funds, buy a second property, and basically not pay interest or interest or principal on all of that until the primary home is sold.
Yep.
So basically, I can buy a second property without it actually costing me anything while I'm still around.
Mm-hmm.
And you pick up a deal on the purchase. Right. These are some of the things that we were struggling with when this whole idea of reverse mortgages were coming out, and we were looking at, well, you know, it's such a bad idea, or they're going to take over the house, or they're going to leave no equity for the senior, and for the realtors, it was, you know, how do I use this as a tool within my business without, you know, being a bad guy that you're trying to sign people up to lose their house. And I think the reverse mortgage industry has come a long way over those years. And the more that I see how a reverse mortgage works and what the restrictions might be, I think there's a lot of opportunity in there that's not available through traditional finances, because that couple is not creating an income. They're not working anymore.
Yeah.
So even with the HELOC, you still have to pay the interest amount.
Interest monthly,
At minimum, you have to pay the interest amount, right? So if you took a HELOC for $300,000, you're paying the interest on that, right? Interest right now would be
five and something, six.
Yeah, $1,100, $1,200 a month that you would have to pay. With a reverse mortgage, it gets tacked on, but you don't have to pay it. So you end up in a cash positive situation at the end of each month. Right? It's a cash flow benefit.
Quick question, Paul, Nancy, is the, how do you calculate the interest? Is it calculated monthly or is it calculated every twice a year, like a regular mortgage?
It's calculated daily, compounded semi-annually.
Thank you.
What's the current rate for that, Nancy?
So our 5-year is a really great rate, very popular at 6.88. Our 3-year is 7.13. Our 1 year is 8.28.
Thank you.
And Nancy, you said with the 3-month interest penalty, if they needed to get out of it, the families, that would be waived if the person or persons either went into a retirement facility or passed.
So no, if they pass, last surviving spouse passes, so they pass, we'll waive the interest, penalty payment, sorry. And if they go into a full-time care facility, we'll reduce it by 50%.
Okay. So it's only if family who inherited the property are going to sell it and it's within the term, then there's going to be the 3-month interest penalty to be, okay.
Is there any interest rate differential charge?
No.
Okay.
Good one. Kim?
Just following up, Nancy, on the comment Esther made earlier. I see you did offer a referral fee to a mortgage broker. Do you offer referral fees if they come directly from a realtor?
I don't see a problem with that. We don't have any realtors signed on, but I don't see a problem. We pay 200 basis points.
Good. John?
Yes, so just passing this on, it's not something I've done successfully, but a couple of years ago when I initially took the ASA course, I think it was Chris Newell that pointed out to many of our questions how do these in any way help a realtor? How does a reverse mortgage help a realtor? So one of his suggestions was in response to, if my client or who I have as a potential client decides that they don't want to move and they get into a reverse mortgage and eventually they pass and the family takes possession of the home, where am I left as the realtor? Because if there was nothing expressly indicated about me listing their home after they pass, then I'm quite possibly persona non grata.
Yeah.
So one of the suggestions that Chris had, and again, I haven't had the opportunity to try this yet, but his suggestion was that that you might, if you're working with that client and you successfully refer them to a reverse mortgage product, that you might see if you can have them sign a codicil to their will, which my understanding at the time was about $100, which the realtor could absorb the cost of that if they wish, which would basically specify in that individual's will that upon sale or upon their passing and eventual sale of the home, that you as the realtor would be the one to be contacted to dispose of the property. So I'd love to try it. Haven't had the chance yet. But.
Yeah, that's a great idea.
That's an interesting point. I'm going to talk to Chris about it some more, and I think we're going to reach out to one of the lawyers to get some more information on that.
Now, if
I
it's
think
wrong, Paul, don't quote me on that. It wasn't Chris.
Oh, I'm going to quote. I'm going to say John Murphy said. No.
I think that would be a little bit risky because you're asking them to put something on the will that could be many, many years down the road, and you may have retired from real estate, and that
Absolutely.
could really muddy the waters. I would not suggest anybody do that, other than you stay in touch with them, you do your regular cards, notes, pop-bys, and all of that, as if they will sell someday, and just do the good work that you normally do and not worry about attaching it legally to anything. I would stay away from that myself. Just my 2 cents.
John, I was going to say, I think the greatest challenge you would have on that, besides whether you're able to do it or not, which I think you would be able to, but broaching that subject with them and what they would then look at you as potentially, especially the estate or the beneficiaries, how they would look at that. They're definitely not going to look at it as, business is business. They're going to look at it as, oh yeah, you're a realtor and you're trying to get your paws into this. So it's a tricky thing, but I'm sure it could be done.
Next thing to Hearst chaser.
Ambulance chaser.
Hearst chaser. Yeah. Next thing to that, you don't want to be known as that. You want to be that kind, friendly realtor that stays in touch with them through thick and thin, help them through the difficult time, help them with the reverse mortgage, but you stay in touch. And when they do come to sell, they'll call you, John.
That's a good strategy.
I think it would be a great opportunity to maybe host a family meeting and get introduced to the adult children. Right? Here's what's going on. I'm helping out. Here's my card. Here's my information. Keep it on hand. This is what we're suggesting. Mom or dad has expressed that, they'd like to work with me should the time come. And here's what this is going to look like. I think that might be.
Yeah.
I mean, if you're bold enough, you could probably do it, but I don't think most people will be bold enough to do that.
Yeah.
Well, the kids have to trust you too. They do.
Yeah.
They have to trust you.
Yeah. So again, that's a great opportunity to have that conversation for sure.
Sure.
Right.
Nancy, can I ask a question? Oh, sorry. Go ahead, Paul.
Oh, thank you. Another question for Nancy. In traditional mortgages, people will choose the term of the mortgage based on their plans for the future. But in this case, I guess people would see it as more or less permanent. So what kinds of thought processes go through deciding on the 1 year, 3 year, 5 year choice?
It's really about rate. So it's the rate term. And it depending on the rate also impacts the LTV. So the higher the rate, you may get more money. The way the calculator works, but there's no amortization on a reverse mortgage. No. So
it's
so you're choosing the rate term. So at the end of that, say you chose a 5 year, So at the end of that 5 year, you would renew into the existing posted 5-year rate.
Okay, so is it basically Bloom that's suggesting which of them to choose?
Sorry?
Or is it basically Bloom that suggests to the client, choose the 5-year because of the
No,
situation?
we give them the options. We'll let them know what they get on each rate, what makes sense. And then some are more sophisticated than others. Some will just see 6.88 and choose 6.88 because it's the lowest rate. Some might say, hey, you know what? I think rates are going down. So I'm going to take a 2-year or I'm going to take the 1 year because I think at the end of 1 year. So some people, it depends on the person's thinking.
Yeah, just like any other mortgage.
Yeah.
Okay, good. Thank you, Nancy.
Interesting.
And Nancy,
Heather?
did you say that they renew at the, sorry, I've got this cold. Did you say they renew at, so if they took a 5-year rate, they have to renew at the 5-year rate again?
Yes. Yeah, with Bloom. Yeah, they can't then choose a 1 year, 3 year, whatever. So whatever rate you chose, you renew at that posted rate.
Okay. And my other question was regarding the penalty. So you had mentioned if both of them have passed or one has passed and one's gone into a home or whatever, the penalty is waived. What if they go into a son or daughter's home, a family member's home? Is the penalty waived then, or is it only an official seniors?
I think it's official seniors. I haven't had that question before, but I think it's in our terms and conditions. It's an actual home.
Okay.
Yeah.
So if they moved in with their daughter, then the 3 months penalty applies.
Yes.
Or applies. Okay. Thanks. Thank you.
Thanks, Nancy. I have to go, so appreciate your time. Thank you so much.
Great.
Thank
Thanks, Paul.
you.
Okay, bye, everybody.
Bye.
Thanks, Paul.
Nancy,
So, yeah,
Yes.
go ahead.
you've worked with traditional mortgages, but the chartered banks in the past.
Yes.
So in your opinion, why do you think chartered banks have not gotten on board with reverse mortgages?
I think chartered banks look at immediate gratification and in terms of what they do. So just an FYI, we sell our mortgages to chartered banks because when a bank wants a profit in the next quarter or the next 6 months, but with a reverse mortgage, you're not getting it probably for 10 years. So, but that being said, every major bank has a referral partnership with a reverse mortgage. So I know like RBC sends their reverse mortgage clients to CHIP.
Okay.
Equitable, I know we have credit union relationships. So they're credit union members that need a reverse mortgage, they send them to us.
Okay. Because it used to be just CHIP, and now that reverse mortgage pool is getting bigger, right?
Yeah, 3 of us right now.
Okay. What's the other one there? Mutual?
There's Bloom, Equitable, and CHIP.
Okay. Okay. I thought, what am I trying to say? Not Mutual. Manulife was getting into it. No?
No, I haven't heard that. No.
Okay.
I think Manulife has other programs, but they're not a reverse mortgage program. So Nancy, that's interesting as well, because that means that not everybody can get in to the reverse mortgage business. I mean, those qualifications and applications to the government and through other whatever's required. There's only 3 players that are able to offer that.
3 players, yeah. Bloom gets their funding. We get our funding from Schedule 1 banks.
Yeah.
So I guess they're indirectly,
yeah,
getting the benefits.
Interesting.
And Nancy, you offer reverse mortgages across Canada, all provinces?
No. Right now we're in Ontario, BC, and soon to be Alberta. And I don't see us expanding any farther than that in the next year to 18 months. I think we're going to be focused in those 3 main provinces.
Are the other, I know it's not your company, but
I believe the others are national.
National, okay.
Yeah.
Great. Any more questions?
That was
Now's
a
the time.
great session today.
Good. Again, we just wanted to get you exposed to it, have the opportunity to ask those questions because it's often a weird topic. It used to be a taboo topic, and now we're
Absolutely.
hearing it more and more and more and more. So a lot of that is broken down, and I think a lot of it also came from the U.S. with the way things were down there.
Yeah.
But we have our own thing going on up here.
Yeah.
So again, I've always been of the mindset that I always let my clients know and give them the information. If I know enough to talk about it, then I would. But it was never a matter of hiding information from clients. So part of this is education for you guys, having the opportunity to, and now you have a contact with Nancy, should something come up or have questions, or even, would this work for my particular client?
Yeah, I'm open to any emails. You want to run a scenario by me. If you want to send me an email, I can send you the links to our broker guide, our broker calculator, and our rates page.
Awesome. So Nancy, we'll follow up with that, and then I'll send an email out to everybody.
Okay, sounds great. Well, have a
Okay.
wonderful day, guys. I really appreciate
Awesome.
meeting you.
Thanks, Nancy.
you.
Thanks,
Great
everyone.
Thank you.
Thanks so much.
Bye.
Thank you, Paul
Thank you.
and Esther.
I just listened.
Good stuff. We'll see you soon, Janet. Thanks, Kim.
Bye.
Thanks, everybody.
Bye.
Okay, you want to do stuff now?